A historical perspective on US tariffs reveals a long and complex relationship. From the early days of the Republic, tariffs have been used to protect domestic industries, raise revenue, and influence the behavior of foreign countries. However, the use of tariffs has always been controversial. Proponents argue that they are necessary to protect American jobs and businesses, while opponents contend that they harm consumers, raise prices, and lead to retaliation from trading partners. In recent years, the debate over tariffs has once again taken center stage, as the Trump administration has imposed tariffs on goods from China, Mexico, Canada, and other countries. These tariffs have been met with retaliation, leading to fears of a global trade war. To understand the potential consequences of these policies, it is instructive to look back at history, and in particular to the experience of the 1930s, when a similar trade war helped to plunge the world into the Great Depression. The Smoot-Hawley Tariff Act was born out of a desire to protect American farmers who were struggling with low crop prices. However, the act quickly expanded to include a wide range of industries seeking protection from foreign competition. As a result, the tariffs imposed by Smoot-Hawley were the highest in US history, averaging nearly 60% on dutiable imports. The passage of Smoot-Hawley was met with immediate condemnation from economists and trading partners alike. Over 1,000 economists signed a petition urging President Herbert Hoover to veto the bill, warning that it would raise prices for consumers, harm American exporters, and invite retaliation from other countries. These warnings proved prescient. The Smoot-Hawley Tariff Act did not cause the Great Depression, but it is widely regarded as having exacerbated the economic downturn and hindered recovery. Following the passage of Smoot-Hawley, other countries retaliated with tariffs of their own, leading to a sharp decline in international trade. Global trade plummeted by an estimated 66% between 1929 and 1934, as countries around the world sought to protect their own industries and economies. The collapse in trade had a devastating impact on the global economy. Businesses that relied on exports saw their markets evaporate, leading to widespread layoffs and factory closures. The decline in trade also disrupted supply chains, leading to shortages of essential goods. The Smoot-Hawley Tariff Act, while intended to protect American jobs, ultimately contributed to the loss of millions of jobs worldwide. Section 4. Trump's trade wars, echoes of the past. In recent years, the Trump administration has imposed tariffs on hundreds of billions of dollars worth of goods from China, Mexico, Canada, and the European Union. These tariffs, which have been met with retaliation, have raised concerns about a potential trade war and echoes of the protectionist policies of the 1930s. While the scale of Trump's tariffs is smaller than those imposed by Smoot-Hawley, they have nonetheless disrupted global trade and raised prices for consumers and businesses. The Trump administration has argued that its tariffs are necessary to protect American jobs, reduce the trade deficit, and force other countries to adopt fairer trade practices. However, economists have been skeptical of these claims, arguing that tariffs are more likely to harm the US economy than to help it. They point out that tariffs are essentially taxes on American consumers and businesses, and that they are likely to lead to higher prices, job losses, and slower economic growth. Section 5. Lessons from history, the enduring costs of protectionism. The history of trade wars is a cautionary tale. From the Smoot-Hawley Tariff Act of the 1930s to the trade disputes of the 21st century, experience has shown that protectionist policies are more likely to harm than to help the economies that embrace them. Tariffs raise prices for consumers, reduce choices, and disadvantage businesses that rely on imports. They invite retaliation from trading partners, leading to a downward spiral in trade that harms all involved. The lessons of history are clear: free trade, not protectionism, is the key to economic prosperity. Open markets promote competition, innovation, and efficiency. They create jobs, lower prices, and raise living standards. While there may be times when limited and targeted trade remedies are necessary, History has shown that broad-based protectionism is a recipe for economic disaster. As policymakers navigate the complex world of international trade, they would do well to heed the lessons of the past and embrace policies that promote free and open markets.